So Lianna, the biggest boom in Australia's history is coming. The current value of the property market is 10 trillion. Now, if property doubles every 10, 12 years, we could see the value of the Australian residential property market at 20 trillion by 2033, 2034. Can you talk through the 5 main forces that you see driving that price growth?
Sure. So the first one is very low supply of current level of stock that's on the market now. There's also going to be very, very little supply coming through as well. And that's number one. And then leading on to that, if we look at what is to come, we actually have a lot of constraints that's preventing construction, building approvals and building starts. And we talked about this in this podcast. So with the combination of a huge shortage of housing we currently got now, which is going to take years to catch up anyway, on top of that, every year we're not making up that difference. We're not actually building enough for the population growth in that year. So if you look at it over the next 2, 3, 4, 5 years, that undersupply is just going to build up. So it's going to accumulate. And then on top of that, what we're seeing is we're actually seeing house price growth now, despite interest rate rises. So imagine what happens when interest rate stabilizes and starting to decline, let's say by 2020, end of 24 or 2025. So that's actually going to be a additional boost for the people that are looking for housing. That's just only going to push them even push even more people into the housing market. And then on top of that, we've also got record-breaking migration as well, which is going to be continuing over the coming years. And so that's going to put even more strain on the amount of supply that we already got. And that's going to create a lot more demand for housing as well. And with the combination of dropping interest rate, people's wages increasing, as well as lower tax rates, which is going to come through in 2024, that's actually going to increase people's borrowing capacity significantly. So we've got all those factors that are actually happening at the same time. They're all interconnected and they just compound the problem. So they continue to push demand up, and yet we continue to have a shortage of housing supply. So those drivers, more than ever compared to history, is present in the current market. And these are all good drivers for a big property boom.
So Lianna, will every suburb experience this boom? How important is it to pick the right suburbs to grow at the maximum rate in the next 10 years?
Well, I mean, not every suburb is going to experience the same growth rate. Absolutely not. The average growth rate probably is going to be greater than doubling every 10 years. But if you pick the right suburbs, you're going to do a lot better than average. So that's what we pride ourselves on at Freedom, myself and our research team. Our jobs is to actually identify the factors that drive individual markets at suburb level, at the regional level, identify the best growth suburbs and the best growth regions. So we actually do a lot better than the average.
A lot better. I mean, if we go through our portfolio of investments, this is something that we just recently started marketing, is that the market average has been 7% around. Our average is around 27 to 29%. So that's the huge gap. That's a testament to the fact that we do our due diligence. We do the research. Not all suburbs grow at the same rate. As Lianna said, we identify those pockets where the infrastructure investment contributes to the growth, the population, the demand contributes, and we just identify those regions and we flock to those regions before it's very evident to the rest of the investors who are on the sideline and looking for the same opportunity. We target those, we get the best prices through negotiation, and that's how we outperform the market by a huge, huge gap.